Oil prices, of course, are surging this following Israel's military strikes against Iran. Joining us now is John Kilduff of Again Capital. He's also a CNBC contributor. All right, John, what's your take here in terms of what this is going to mean for the oil market?
Well, I think we're unbelievably almost, David, taking this in stride yet again. You know, when it comes to Iran, there's a lot of fear around that country's perceived power and ability to retaliate. And now this is going to be the third iteration in several years where significant attacks were made in Iran. The market holds its breath. And in a way, thankfully, little to nothing happens. I think because, and it's our view that Iran has been so degraded militarily at this point by the Israelis that there's not a whole lot they can do. So the risk premium, while it has to be there, it does come rushing into this market. Cooler heads and really the reality of the situation tends to prevail, and these markets calm down accordingly.
Yeah, you know, we can all question Iran's military response or their ability to respond, but what about asymmetric response, which you can't discount, and what that could mean?
That's where Iran's real power would seem to lie at this point. Obviously, straight up one-on-one military confrontation, not there. But attacking oil infrastructure, for example, anywhere in the region, you know, or backing their proxies like the Houthis to put attacks like they did a number of years ago against Saudi Arabia's, you know, Abqaiq facility, for example. I will say, though, that the Iranians are finding themselves having to walk a fine line here because they do have obviously some support from their Arab neighbors, but it's limited. And the Saudis in particular don't want a region-wide conflagration. They had asked President Trump to not have this attack even occur. Here we are, but they don't want that.
What about China and Russia, notable buyers of Iranian oil? Where do they sit in all of this? And the fact that they would be losers if there was some sort of disruption from Iranian oil shipments or through the Strait of Hormuz. How does that play out?
That's the big pushback on Iran, Sarah, is China in particular. They don't want their economy. Our economy gets hurt. We've seen the inflation effects during the Ukraine war from higher oil prices. But the Chinese economy, being industrial-based as it is, gets crushed. So they don't want any disruption of oil supplies out of the Middle East, particularly the Strait of Hormuz. So they are a new element in this Middle East gaming out situation in that they keep everyone sort of at bay and reconsidering escalating this to the next level.
All right, John, so I'm realizing it's obviously a dynamic situation. Give me a call, though, on oil, you know, over the next few months. I mean, do we calm down from here or do we sort of stay at this level? What do you think?
I think you've seen the worst of it for now, David. I think to the extent that, you know, this dissipates, this risk premium will quickly come out of oil prices. The price range we've seen right around that $60 a barrel mark for WTI, $5 above, $5 below, that's sort of where we've settled out. And we'll have to see how summer driving demand goes here in the United States. It's looking a bit soft right now, and other factors. But I think the downward pressure on oil prices should resume. And I wouldn't expect this situation to cause the wheels to come off that bus.